Hello, everybody, and welcome to HardAssetsInvestor.com. I'm Mike Norman, your host. My guest today is Ed Ponsi, who is the managing director of Barchetta Capital, making a return appearance. Great to see you, Ed.
Great to be back, Michael.
Now, I'm very happy you're here because I want to talk to you about what has been going on specifically in emerging markets and emerging market currencies, where we have seen, major selling happening. What is your view now of this big rout that's going on?
Okay, this is definitely taking all the headlines right now.
Yeah.
Everyone's very excited about what's happening in emerging markets. Now, it's funny. They get all bought and sold together as a basket by a lot of investors. So you will see some good emerging currencies get hit with the bad ones. But the trouble spots seem to be Turkey, South Africa, Argentina right now. This could just be a blip. It could just be a short-term issue because the problem, if there really is a problem, it's more of a problem of perception. A lot of money is coming out of emerging markets, though, and that's a tough reality that we're going to have to deal with. So this could go on a little while longer, but I don't think it's going to be a tremendously big story this year.
I tend to agree with you. I think it is a question of perception. I also think it's being exacerbated by the very policy that these countries and their monetary authorities are using. Like when they raise interest rates, right? The governments are net payers of interest. So as they raise the interest rates, they're literally pumping more of those currencies into the economy. They're increasing the supply of them. And you could actually see the performance as they raise the interest rates, they tend to fall even faster. And when those central banks say, okay, now we're going to pause, they rally. But I do think it's perception. I think you're right. So should we... you mentioned they're throwing in the good ones with the.
They're throwing out the babies with the bath. They're throwing out the babies with the bathwater here. Okay. First of all, I love Mexico. You've had a lot of economic reform in Mexico the past few years. Not too many people are actually aware of this, but the markets have been reformed, and the peso has actually performed pretty well. It's actually hanging in there pretty good when you consider most of the emerging currencies are getting hit hard. I also like India. They had a big change in the central bank in India back at the beginning of September, and a big change in policy, and the new head of the central bank, Mr. Rajan, has them on the right track. So if you see an emerging markets rout, I would go to Mexico, I would go to India, I would stay away from Turkey.
Now, what about the spillover effect? Because it seems to have gripped investors here in equities, in metals, gold, and silver. So should we take the same sort of view that this is an overdone situation?
Most likely, because the dollar has strengthened a little bit since this crisis began. If you want to call it that. And the dollar has gained a little bit, and that's probably due to emerging fears. You've got money coming out of emerging, and it's going to go to safe havens. And the tell there is the yen is also strengthened. The yen is also doing well. So there's a little bit of fear. Sometimes a little bit of fear is not a bad thing, especially when the stock market has performed the way that it has. I think it's probably healthy that we knock it down a peg so we can get some good entry points to get long.
Yeah, no, I agree.
We've had a fantastic bull market, and you need healthy corrections. You need to back and fill because, if you look, I'm a chartist, and if you look at the charts, the times where you really have trouble and you really have bad blowups in the equity markets is when things go parabolic. When markets go straight up, that's when they can get ugly on the way down. But when they back and fill, they create little support and resistance levels, and that acts as a cushion on the way down. That's really what we want to see happen.
Yeah, actually, we're on Wall Street now. Obviously, we're at the New York Stock Exchange. On my way over here today, I saw a news truck, and I always say, buy the news trucks, right? Whenever there's news trucks on Wall Street, it's about something scary going on, and that historically has been the time to buy.
Buy a little bit of fear, right? And there's definitely a little bit of fear now. It's a good thing. It's healthy. I think the way the market pulled back late last week definitely caught people's attention because it was a little bit scary. We had one day where the Dow was down 300 points. And it happens on a Friday. Then everyone has all weekend to think about it, so that gets their attention. But overall, if you back up and look at the chart over a long time, This is just another
Yeah.
dip in a long series. You know, you can't have green every day. It's not healthy for you, and it's just another in a long series of dips. I think the bull market's still intact.
Nothing moves in a straight line. You know what's interesting is that a lot of people who several years ago, 3-4 years ago, were saying that all the central bank monetary operations were going to cause inflation or even hyperinflation. A lot of those very same people now are talking about deflation, which makes me think time to buy the commodities again, right?
Well, you know, Michael, it's so funny because, you know, you and I are the only two people, I think, who believe that tapering of QE3 isn't really going to have a big effect on the dollar one way or another. I don't think it will, because if you look at the chart, right, go back to the beginning.
It might be bearish for the dollar when everybody thinks it's bullish.
Everyone is parroting the same thing over and over again. The Fed's going to taper, and therefore the dollar is going to get stronger. Look at the chart. There's no evidence at all that quantitative easing caused the dollar to weaken. So why would unwinding that policy cause it to strengthen?
Absolutely.
You know, and so everyone has a very strong belief here, but I don't believe anything. I just look at the chart. The chart tells me that the U.S. dollar index is pretty much where it was when this whole thing started.
Exactly.
And if the dollar is getting stronger right now, it's probably more due to those emerging market factors and a little bit of fear there than having anything to do with quantitative easing and tapering.
Right, I would totally agree, and in fact, I've been arguing that over the years on this very show. Now, just quickly, what's your outlook for gold?
Okay, gold. Okay, I'm not a big fan of gold. If you look at the charts, it's definitely in a long-term downtrend. In January, we have had a good month for gold. It's come up quite a bit. I would say that there's probably still more upside on gold in the short term, but you know, in the longer run, I think gold will do all right, but I think there are so many other places you could have your money. I think equities will outperform. And I think if you find good valuations, like stocks, especially stocks that have gotten hit on earnings recently,
Right.
like Apple, you know, I really think people are underestimating future products. Everyone's looking at the products that are on the market right now and saying, well, you only sold this many iPhones and this many iPads, but no one's thinking at all about what comes next. And that's where I think, and then you got to look at that big pile of cash too.
Or about Carl Icahn. He usually wins, okay? And
Carl,
he's
don't
in
go
there
against
big time.
Carl.
Ed, terrific. Always great to have you. Thanks very much.
Always a pleasure, Michael. Thank you.
That's it for now, folks. This is Mike Norman saying see you next time. Bye-bye.